So this is question related to corporation tax liability. So let's see what is the requirement of the question. We have to calculate corporate tax liability for the year ended March 2024. Your computation should commence with the operating profit figure of 200,692, indicating by the use of zero any item which do not require adjustment. You should assume that the full annual investment allowance is available to Venus Limited. So let's first discuss the question, and let's prepare a pro forma as well. That we have to figure. So operating profit here is 200,692. Now we have to add disallowed expenses here. So depreciation is a disallowed expense. So we have to add it back. So depreciation is 32046. So as the amortization is 4,000. Now, what is note number one? Note number one is on 1st October 2023. Our year end is March 2024. Venus Limited acquired a building for the use, paying a premium of 96,000 for a grant of 12 years lease. So we need to identify deduction against premium. And the formula is premium into divided by 50 and time apportion from October till in life is 20, in life is 12 years. 96, this is 12, this is 50, and divided by 12, this will give me an amount. As a result of this, so it's after adjustment, it's 3120. This is the amount that we need to deduct against the lease premium. So deduction against lease 3120. As far as the other expense is concerned, other expense includes UK entertaining customer, which is a disallowed expense. Gift to customer of food hampers, again it's a disallowed expense. QCD again disallowed expense because we have to deduct this QCD from the main pro forma. So first of all, the entertainment gift containing food hampers and qualifying charitable donations. So we have to added it back 3,600, 2,730, and 1,410. Now let's talk about plant and machinery because we have to calculate capital allowances. So at the beginning of the year, we have main pool balance 8,400. We have a special rate pool balance 12740. And then during the year, we have acquired car 1 having CO2 of 115. So that means it's a special pool item car. Then we have a new delivery van. And here we can calculate AIA on that, as well as equipment So AIA is also available on equipment. Then we have car number 2, which will be transferred to the main pool, having CO2 less than 50 gram. On 15th March 2024, Venus Limited sold car 1 that had been purchased on 10th August for 16750. So for capital allowances, we have main pool, then we have special pool and allowance column. So TWDV brought forward given in the question, and that TWDV brought forward is 8400 12740. 8400 12740. Now we have addition, which is not qualify for AIA, that is car 1 having value 22930. So it's 22930, and we have car 2 having value 26470. It's 26470. Then we have addition qualify for AIA, and here we have delivery van, we have equipment. These two items are eligible for AIA. What is the value? 20800. 20800. And what about equipment? It's 52112. 52112. And the whole value we need to see is 72912. AIA is 1 million for a 12-month period of account. So the full AIA is available, and that would be transferred to allowance column. So as a result, the value is 0. And now we have one disposal of motor car. So motor car disposal, we have to take the disposal proceed, which is the lower of. So whatever is the lower of value, disposal proceed is 16750, and that car 1 was purchased at 22930. So 16750 is the lower value. So now after this, we have to compile the figure 8400 plus 26470. It's 34870. And we have 18920. So WDA of 18% is applicable on main pool, and WDA of 6% is applicable on special pool, which is 6277. And this is the allowance. And again, which is 1135. And this is the allowance. So as maximum allowance we need to calculate. So this is the total allowance. And this is TWDV carried forward value 28593. And we have 17785. And total allowance figure is 80324. This total allowance value 80324, we have to deduct from here. This is capital allowance. 8. And in this way, we can calculate the tax adjusted trading profit figure. Starting from operating profit, then we have added few items. So it's 161034. It's 161034. This is my tax adjusted profit. Now, other income, other source of income. So we have income from investment, bank interest received. We have dividend received. Dividend is an exempt income. So as far as dividend is concerned, is zero. Profit on disposal of shares, 70300. So this dividend was received from a group company. Dividend is always exempt figure. The profit on disposal of shares is against 2% holding that was sold on 18 January. The disposal resulted in a chargeable gain of 62880 after taking into account of indexation allowance. Profit was given 70300 and chargeable gain was 62880. So we need to calculate, we need to take 62880 here. 62880. Now, as far as the bank interest is concerned, interest we need to assess on accrual basis. So interest received is 18050. The bank interest received during the year is 18050, relates to non-trading purpose. In addition, 350 of non-trading loan interest was received in 10th April 2024, but that was related with 31st March. So that means 18050 was received and 350 was accrued. So total interest that we need to take is 18,400. So this is what our total figure, and that is 242314. This is total profit before QCD. And we have adjusted QCD 1410 in the above. So we need to deduct 1410. So this is total profit after QCD, and which is 240904. Now there is a group related adjustment. Group relief for the year ended March, Mars Limited, the 80% subsidiary company, made a trading loss of 7635. Venus Limited has made a group relief claim for the year ended against this loss. So we have enough profit so that we can offset the loss of another group company, 7635. So we have to take group relief of that subsidiary company, 7635. And this is what TTP is. So we have 233, 269, 269. This is the TTP. Now we have to apply the tax rate, and we have to see what is the limit, because the upper limit is 2,50,000. Upper limit is 2,50,000, but we need to adjust this as there is a group company. So there are two companies, one is parent, other is subsidiary. So divide this by 2. So we have upper limit of 1,25,000. This is the upper limit. And as my TTP as well as augmented profit. So my augmented profit is TTP, which is 233,269, 233,269 plus dividend, which is 0 because it is from a group company. So this is my augmented profit. As my augmented profit is greater than 1,25,000, so main rate of 25% is applicable. So as a result, the tax liability is 233,269 into 25%. That is tax liability. And as a result, answer is 58317. So this was the question where we have to first of all adjusted accounting profit into tax adjusted trading profit using the capital allowance figure, the lease deduction, and then we have identified bank interest as per accrual method, profit on disposal of shares, then one group relief, and then the identification of relevant tax rate.